Hello and welcome to Business Today Television. I am Siddharth Zarabi and with me my colleague Sakshi Batra. You're watching the special series of Market Masters here on Market Today, and joining us today, one of the most well-known names in the world of investment, Arvind Sanger, the managing partner of Geosphere Capital, a name and a face very familiar to Indian viewers because he doesn't just talk about the Indian markets but also provides us a great insight into global markets. Arvind, good morning. Thank you very much for joining us so early in the hour with you, and thanks for making the time with us. Let me begin by first asking you to provide us a sense of how the markets are currently. As you know, in India, we've just begun the new financial year. So, as overview of where do you also see the Indian markets in the current financial year?
Well, I guess I'm not thinking of financial years, but I will give you my perspective just in the coming, months and years. And I think that, the Indian markets obviously have had a great run and have a lot of good news discounted in them. There's an election coming up. The market is obviously hoping and expecting no big surprises, and there will be a repeat of the current situation carrying forward in terms of the BJP government. And I think the economic growth, is on a improving trajectory. Inflation is under control. So I think that the bottom line is that, the Indian markets are in a good position. They're just, not as inexpensive as we would like it, but I think over time will take care of that problem. So we think that that the markets are going to continue to perform well. There'll be short-term fluctuations. Right now, China is showing some signs of life, so maybe some foreign investors will take a little bit of money out of India, but that shouldn't matter in the long term. I mean, if you're talking about the next 12 months, I think those short-term gyrations will not matter.
Okay, a very warm welcome to you, Mr. Sanger, on Business Today Television. It's always a pleasure to have you with us here, and of course, understand from you what you think of the markets going forward. Do tell us, at the current juncture, what is keeping you busy? Where are you taking off some of the chips? Where are you investing deploying fresh funds in the Indian markets?
Well, in the Indian markets, we have reduced our exposure to some of the small and mid caps and increased our exposure to some of the larger caps. And for the simple reason that I think the valuations got too stretched, the bullishness is too much. And we've seen actions recently, by SEBI to try to, put some guardrails around some of the things that have been going on in terms of, some of the small cap funds. But the reality is that it still remains a market where there are a lot of interesting companies across the size spectrum. So we still look for good ideas, and they're not on any particular sector. But from an overall portfolio positioning standpoint, we found actually, some of the laggard large cap names providing better risk-reward returns than some of the more, racier, if I may call them, small and mid-cap names.
Arvind, which are these laggard large caps, as you put it, that you might be looking at presently?
Well, some of the larger banks, private sector banks have been laggards. The HDFCs, the ICICIs, Kotaks, they've lagged a lot. So that's an area where, there have been some challenges. We've stayed out of those names, but those have become somewhat more interesting to us. We're looking at some of the companies and some of the other consumer-related, but not directly consumption-related names. In the air conditioning names, somebody like a Voltas could be interesting. Some of the domestic, other consumption plays where things have lagged in the large cap space. Those are areas that we're looking at, where we are finding opportunities. We're still, sitting on a little bit of cash, so we haven't found all of our names. So I don't want to front run my own ideas, but I think that these are some of the areas where we are looking to put large cap positions in our portfolio.
Quick follow-up, Arvind, since you spoke about the private banking space, and if you can bring up HDFC on our charts here. What's your view on HDFC, a merger that was completed, and then obviously some of the numbers rattled investors a bit, but what's your outlook as far as the HDFC stock is concerned?
We think that a lot of the bad news is priced in. We think a lot of the challenges that they had in terms of after the merger, kind of having to deal with the deposit side of the franchise and to be able to, grow that and to be able to, absorb HDFC. That is behind us. The valuation is attractive. I think the franchise is not by any stretch broken. But the loan to deposit ratio was a challenge for a lot of large banks, be it public or private. Whether it was an SBR, an ICICI, or an HDFC Bank. HDFC Bank and Kotak may be a little more acute than some of the others. But we think that the valuation is attractive. The growth of the Indian economy is not going to happen without the largest banks participating. And we think HDFC Bank remains, a quality name in that space.
Okay. Mr. Sanger, one more space that I wanted to ask you is the outperformers. You've talked about the laggard space where you have you're now building up positions in. But what about the outperformers? Last year it was all about the PSU stocks, be it defense, railways, power theme. Everybody was going after it like there was nothing else in the markets to really look at. How would you expect these spaces to perform now?
Well, look, we have liked the power space for a while. We think that India has structural power needs which make it interesting. But there are many ways to play it. There are some power equipment suppliers. There are some major power producers. NTPC obviously being the largest player. But there's NHPC. There's many others. We think that the power sector remains interesting to us. We have not really played the defense sector, although I guess there are companies that benefit from that. There's the infrastructure side, but the challenge for us remains. We don't believe that that in general, PSU corporate interests or government interests necessarily align with shareholder interests long term. So yes, they are good for a trade. We've played Coal India in the past. Coal sector, demand is growing, but our view is we don't fundamentally long term believe that that we look for private sector ways to play these themes because we think there's a fundamental disconnect between the shareholder interests of the government, which can often be national service, and the shareholder interests of investors like ourselves. So therefore, we're always a little more cautious about getting too far into the public sector space.
Arvind, much of the natural resources space still sees government involvement, and I take your point as far as a growing economy like India is concerned, and perhaps there would be a parallel with China as well. I just want to quickly come back to the private banking space for a moment. The rate cycle, there is a lot of anticipation that is being that is built up and perhaps is also being built into prices, is expected to turn. We have seen regulatory developments in the recent past which seem to suggest that while the regulator is worried at the pace of credit growth, it may not impact private banking as much as it may impact NBFCs. How do you see the overall impact of the regulatory stance as far as credit growth and interest rates are concerned on the private sector bank lending growth and the kind of business they are able to generate?
Well, I think the regulator is much more concerned about the unsecured lending part of the book, and correctly so that was growing maybe faster than RBI was comfortable, and they've taken some measures. But I think that when we look at the major private sector banks like the HDFCs, the Kotaks, the ICICIs, they're not really playing in that space. Space is not a big part. I mean, there's a part, but it is not. But I think the economy generally, if private sector capex is to take off, if the growth in the economy is going to continue, then it's going to require, loan growth in the more sedate parts of the economy, not the more riskier parts of the economy. So I think that, if the rate cycle is going to turn, and I think India is not an outlier, it's going to be a rate cycle turn. ECB is expected, Fed is expected, and many other global central banks are expected to ease rates this year. And I think RBI is likely to be in the thick of that. And so I think that there's a part of it that is slightly more risky, but there's a broader economy that will benefit from a reduction in interest rates. And so I think that in that sense, the private sector space should benefit from that.
Okay. Well, at that point, Mr. Sanger, we'll take a few viewers' questions with you as well. So the first question that's come in, it's coming from Mumbai, from Suraj Pal. He wants to know from you, and this is in the same breath that you have just talked about the interest rates, that in terms of asset classes, both equity and gold are now hovering at all-time high levels. So where now should investors put in their money?
Well, I'll tell you now, you asked me, gold is a global play. We are very bullish on gold. We're bullish on energy and metals prices. We think that, some of these areas could be themes that, it's hard to play in India, to be perfectly honest. But gold, I think as a theme, it has broken out. And I think that that's an area that we think over the next 1 or 2 years could be a very interesting place to invest. There are no gold mining companies in India, but there are gold lending companies and others that you can play. Metals and mining, we think we're very bullish on copper and aluminum. There are ways to play that in India. Hindalco obviously being the most prominent one, but not a pure mining play because there's the whole downstream sector. But we think that energy prices are headed higher. So these are some of the themes that we think India is not necessarily the best play for us from a global portfolio, but for Indian investors, we think these are the type of themes, and exchanges that will benefit from this coming commodity boom. That would be another way to play it. So there are ways to play it in India, which we think are somewhat unique to the Indian circumstance, because we are never going to be fans of ONGC or companies like that. Because their track record in finding and growing from oil production is not something that we are excited about.
Arvind, I have to tell you that we have almost a dozen questions that we have received from various viewers when we told them that you are coming on the show, and we selected them, but I don't think we have time for all. So I'm going to skip some of those and come to a question that's come from Noida, which is where we are also based, our operation. And the question is from Anjali. And she asks a question which is quite relevant. What is your view on the underperformance of the IT sector? And she also wants to know if the pain will continue as far as the large cap companies in this space are concerned.
Well, so the IT sector underperformance first happened because of concerns about growth slowdown in the US and global economies. But the IT underperformance has continued because the boom that happened after COVID with a lot of more remote work benefited the IT sector. But I think today, if I was looking at it from a 1 to 2 year standpoint, I think there are opportunities and there are risks. So the ones that are in the high end of the space and can benefit from enabling companies to implement AI will benefit. But I think the mass of low-end IT services are at risk of getting disintermediated by AI, and so therefore it's a fine line. I think IT sector is not unattractively priced, but it's not a compelling play for us. We think there's a trade here because valuations have gotten interesting. But the persistence of the world and others who have more of a niche technology, and it's interesting that today some of the small and mid-cap IT companies have outperformed the large ones. In the old days, it used to be you buy the large ones because they outperform. Today, mass IT is not the place to be. I think you have to take a much more rifle approach in terms of where you invest in the IT
So what would your top couple of picks be?
Well, I mean, I think you should persistent. We're not investors right now in those names, but names like that look interesting to us. Parts of the L&T infotech, maybe that's an interesting one. But we have not done a deep dive yet. We are looking at that space, but our view is it's kind of hard to figure out how many of these will be winners and what will be the offsetting negatives. But the reality is that the persistence on the L&T infotechs are already trading at 52-week highs. These are not the shares that have lagged, and the market is reasonably efficient in the sense that it's the Infosys and the TCSs and the HCL Technologies and others that are lagging because of the fact that they have such a broad spectrum that some parts will win and some parts will lose.
Okay. One more question, very interestingly, has come in from Bengaluru. S. Ramesh wants to know from you, Mr. Sanger, that how can one really take an early entry into the sunrise sectors like, say, renewable energy, solar power, semiconductors, AI, when there are extremely few listed stocks in this space right now?
Yeah, it is an interesting idea. I think that it's an interesting challenge. I personally, in my fund, invest in venture capital and have some investments in startups. But I would say that there are companies in the recycling space. So we are invested in one company which takes used plastic bottles and converts it into chips, and then now there's an increased requirement for recycling of plastics. We have another company which we're invested in, which makes key equipment for EVs, including for the major supplier to Tesla, based in India. And so there are niche companies that are already in this space. Solar, we are somewhat skeptical of because the price advantage of China is so much that it needs a lot of tariffs. So we're not looking for companies that are tariff benefiting short-term plays. We're looking for companies that have world-class capability and unique niche that can benefit. But I think absolutely investors should be looking at these sunrise sectors and seeing if there are ways to play. Obviously, there are a lot of companies that are installing major parts of solar, whether it's Adani Green or there's a number of other companies that are, Tata Power has major investments, but there are other emerging companies. So, we would look at some of these and try to judge where the valuations are not excessive, but these are areas that are going to continue to prosper.
Okay. Mitesh Kadam from Mumbai has a question for you, Arvind, and he wants to know, are there any dark horse sectors that you think might surprise us by delivering strong performance this year?
I'm sorry, any dark horse sectors? Okay, that's an interesting
The question is right here on the screen. We'll ask our producers to keep it on the screen.
Gold and metals.
Gold and metals.
Gold and metals could be areas that have not done much, which could perform quite well this year.
Okay.
Wonderful. So gold and metals, you did talk about the ways to play gold. Would you also be interested in gold financing companies? We do see a lot of them now hitting record highs like Muthoot Finance. Is that
Absolutely.
a play? Oh, okay.
Absolutely. Gold financing companies would work.
Okay.
Okay. There's one more question, and this is from Venkatesh SL from Chennai. He wants to know, what is the best way to play the consumption theme in India?
Well, I mean, I think there's consumption and there's consumption. Do you buy a white goods consumption company in the air conditioning or other space, or do you buy a consumer good FMCG company like a Dabur or Hindustan Unilever? I think the thing that has been, there are also consumption space. I don't know if I call it consumption, but construction related, tile companies, or bath fittings, those kind of companies. So there are many parts of the consumption theme. We don't look at it as I've only got to own FMCG.
Yeah.
So we look at some of the other parts of the economy. If real estate is booming and that's where consumers are, savings are going, then is that a place to play? Is there a place in the auto space? It's not normally considered consumption, but we broaden our definition to try to find themes in different parts of the economy two-wheelers, four-wheelers, or people who supply, auto parts companies. So although many of the auto part companies are more global than they are India, but the India consumption theme itself has many angles, and we look at it slightly broader than what some might define as the conventional consumption theme. And then there are retailers, right? So you have retailers that are focused on the grocery side. There are retailers that are focused on tier 2, tier 3, tier 4 cities that have lagged a lot. We are very interested in that theme. We're very interested in some of the companies that have struggled over the last few years because this has been a bit of a K-shaped recovery in terms of consumption. So we're looking at some of the laggards in the K-shaped recovery to see if the economy broadens out, then that could be a very interesting part of the story.
Okay. One more question has come in from New Delhi. Preetham wants to know from you, what is the best way to get the right geographical diversification for the Indian investors today in terms of the markets where you're bullish on?
Well, if you mean within India, geographical diversification, or globally? If you mean within globally, I would say that there are obviously options available, but I think globally investors should look at if they can access opportunities in a broader sense. U.S. markets are always deep, although U.S. markets are not cheap. But Europe has been a huge laggard. China has been a laggard. So I would just take a basket approach. And clearly, I think the AI hype is a little excessive short term. I wouldn't chase that right now. But over time, clearly, AI theme, the big winners are going to be in the US. Okay. And so with some patience, playing that theme, it's going to be important.
Okay. The point about AI is very well appreciated, Arvind, and that's a great point that you make. We are coming to the end of our conversation with Arvind Sanger, but we have time for perhaps one more question, Arvind, and this is from Payal in Bengaluru, and she wants to know, how does one pick a multi-bagger? Because while small stocks generate staggering returns, the advice is usually to stick to large caps.
No, I was just talking in the short term because of valuations. And frankly, the problem with investing is if you start with, I have to buy a multi-bagger, you end up taking too high risk. You have to start with, let me buy good companies across the spectrum. I talked about companies that are, small company that is doing plastic recycling. That could be a multi-bagger over the next few years. I talked about a company that is doing, but I'm not saying all my portfolio is in large cap. I'm saying as a weighting, I'm putting a little more in large cap. But I don't. But I think I'm looking for interesting companies at reasonable valuations. And if some of those work out, then they can be multi-baggers. But I don't go in expecting every one of my stocks to be multi-bagger. And yes, the large caps, will not necessarily be multi-baggers. But I think in a portfolio approach, you have to have a balance.
Well, balance is the best a word that we can end this conversation on today, Arvind, because you have to be balanced in your approach and your risk appetite also has to be balanced given all factors in mind. I know there is much more to talk, but we'll let you go today, hopefully with the promise that we'll get you back with us very soon, perhaps in the midst of the election cycle or soon after. Arvind Sanger, always a pleasure to have you on the show. With that, it's a wrap on this episode of Market Masters. Viewers, we've had Arvind Sanger offer us several key points of advice, and the last bit really on multi-baggers will be available to you on the BTTV YouTube channel as a separate chunk. Do listen, do keep looping that, because that is great advice. Also, several stocks spoken about here, including in the IT space, as well as the biggest of the biggest in the banking space, which is HDFC. With that, it's a wrap from me and my colleague Sakshi Batra on today's episode of Market Masters. We'll keep trying to bring you some of the best names in this business from all across the world. Do provide us your feedback, do send in the questions, and we'll see you very soon once again. Until then, goodbye.
welcome. You're watching Business Today Television.